The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 29th day of September, wrapping up September. Woo, what a month. So I want to thank our hosts today, and we've got programming right through the day. Of course, being Tuesday, we also add Andy Hecht at the end of the day. So Kevin Hinks comes on after me, a great options hour. Then you've got Steve Rhodes, terrific show, as Steve shows you all the different techniques and different studies that he's done to show the various indices, where they are, what they've done. He also does a lot of work with the astrological aspect. Then, of course, you've got Dave White, Power Trading Hour, terrific show there as well. Tom O'Brien comes right back. You've heard Tom earlier this morning, and on a terrific streak here with some terrific calls. So we've really got some action, and of course, straight after Tom comes Andy Hecht. So programming right through the day. Now let's go to a couple of things that we're looking at. The E-minis not only went to a lower low today, but they made a low that is going to start to affect the monthly chart, let alone the weekly chart. So this is just such an important phase. And the momentum to the downside, you can see it here on the 120-minute chart, went down to 1861 ups. Was that the round number low? 1861 round number low at 4 o'clock this morning, early this morning. Ran up quickly, got a potential cup formation, hit the Chapman wave inside wedge, pink dashed resistance target line when it went to the high of 1889.75, pulling back, holding above the 9 EMA. The fact that there's been some hesitation here says that the power of the down move, especially with window dressing coming in, means that some fund managers are still negotiating their portfolios. They are trying to eliminate the stocks that have done the weakest, and they are trying to hold on to the stocks that have done best, because after all, when you send out your statement, you want to be looking pretty darn good. So you've got January, February, March, April, May, June, July, August, September. So you've got your end of September quarter coming up. So it's going to be very interesting. Two things that are really important as far as I'm concerned here. One is that the VIX index, which is trading right now, if I can see it, at 20, in the 26s, if the VIX index remains in the mid-20s, and certainly if tomorrow at 4 o'clock the market closes out with the volatility index still high in the 20s, I'll be showing you things on Thursday that are actually, they're quite spectacular in terms of technical analysis, but let's wait until we get there. Meantime, back at the ranch, as I like to say, let me pull this 120-minute chart down a little bit so you got some of it, because we're going to be looking at some very interesting chart formations here. Just quickly checking right, no, not for me. Here we go. INDU, the Dow, up 59 at 16,061. 16,000 is really important. Why? Because at 16,000, you've got the same equivalent, as far as I'm concerned, in my work, to the 17,500. Do you remember? Let me just squash this chart, and you'll be able to. I'll open it. I'll expand it. This is the Dow Daily that I show my subscribers to my opening call. Right there. There we go. Squash, 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 squash. Open it out. Continue squashing, squash, squash. Open it out. You remember this area right here? Oh, actually, I don't have to squash it that much. Remember this area right here that I was talking about over and over and over and over? right here at that 17,579 and then 17,000 we tested. We went to under it and bounced back up. 17,465 the 7th of July. And I kept saying over and over, you're looking at 17,500 area, going to the 17,400s and start to trade the 2 out of 3 sessions and close under the 17,500. That'll be a big negative. Well, not only did we do that, but we closed so significantly low. We smashed in the 17,030s. Key left side support of the 2nd of February is 17,037. 17,034 was the other one. And then, bam, we went right down and smashed to the 15,370 level on August the 24th. Why is that important? Because of chart patterns. Chart patterns are very consistent. Look what we've got here. I took it out because we're starting to look a little messy. I've got it on another chart. If you go to the high, right there, it's 18,350 that was made on the, what was that? So 18,354. And there was a 2-bar reversal of 18,350 the very next day. And that was, I believe it was May, was it May the 23rd? Let me just check. May the, why, I said 5, I meant 18,351. The high that was made at 18,351, and then the very next day, the high was 18,350. That 2-bar, Chapman wave 2-bar reversal suggested two things. It suggested that it's very significant what we're looking at in terms of a reversal, and it's also very significant in that if I'm looking at a price extension to the downside, if you think of this, remember I called it a complex head and shoulders pattern. And the complex head and shoulders pattern said that that whole level of 17,500 was important, but a break below 17,000, the neckline, would be very disconcerting for the, should be disconcerting for the bulls. Why? Because if, in fact, what you're looking at is, let me make that green. If you're looking at a 1-to-1 extension to the downside, it could take you around to around about 15,600. And what was the left side that we were looking at? We were looking at the October low of 15,855. So it would take you even below that. Well, what happened was we got that August smash to the downside of 15,370 on the 24th of August. Now you're getting that reciprocal left side, right side cup formation, arch formation, and it's saying we've got the same thing going on at 16,000. And if 16,000 goes, it's going to be a quick trip down to the 15,370 level. That's kind of the way the chart is looking. That's why today is so important. And here we are, Dow 16,032, up 31. S&P is up 6 at 18,888. Let me just do this quickly. As I'm talking, I'll just give you the charts. SPX.X, there we go. S&P is testing 1,867.01 was the low of the 28th of August. 1820.66 was the low of October. We haven't even come close to that low yet. But look at this arch formation. Look at the way we're testing the wick. And remember what I'd said in the monthly chart? I'd said in the Chapman wave Roman candle notation, this is a technique that I developed. I've never heard Steve Nissen talk about this particular pattern. Maybe he has, I don't know. But I discovered it a long time ago. And this Roman candle, it looks like a Roman candle. You know what happens? You light it right there at the top with a little tiny wick, and that whole body starts to implode. And the next thing you know, whoosh, you break the low. And I'd said if the S&P starts to trade below 1928 to 1926 support for 1 or 2, even 3 days of the week, we will quickly see a decline to test. The rule is there'll be a sharp move toward exactly on or just under the previous left side low of importance. And in this case, it's 18,067. And so far, we've gone to 76. Is that correct? We've gone to 1876. It's 9 points away. Hey, not bad, huh? But the day is young. So now let me go through a couple of other things. So that's very important. On the upside, you've got the 120-minute chart, if I can get back to that. And the 120-minute chart, I think I've got too much space to the right. No, 7. Let's just make it 7. Here we go. Is saying that the resistance is at 1902 to 1905. That's the level that the S&P has to get above to be able to make some kind of an arch formation of importance. Okay, enough with that. Let's just quickly run these. QQQ. The QQQ is at 100.48, up 49. Not a great pattern. Weekly chart is way better than the others, but it's starting to deteriorate. Monthly is starting to deteriorate. Really important to keep your eye on this. So the levels to watch are, I would say a close under 99 would be very negative, and you need to see a close over 101.70 to at least attempt to try the 102.96 9-period exponential moving average. Let me quickly go to the VIX index. Doesn't have to be quick. There's no real rush. The VIX index at this particular point holding beautifully at 2663, made a peak. See if there's no new high today above 2833, and at 2834 you make leg D. Now, what's really important is this weekly chart. I'll just mention that it's important. No use even talking about it because we're only into a quarter of the second day of the week, so we won't even talk about that. However, you have gone to a peak D, potential peak D in the VIX index, 120-minute chart. However, as long as it's holding in the mid-20s, we've got a whole new ball game to contemplate here. So now let's go on. IWM was looking horrible yesterday. Today, it's only looking terrible. It's not looking horrible anymore. It's just terrible. Wow, it is so close to breaking. There's that Roman candle, broke it. This is the rule. And now you're into the Chapman wave, inside track support. A close this month below, it's at 107.98, down 32 cents. A close below 106 says watch out into October. Okay, now I've done those. I want to go to gold. Gold at this particular point is trading down 60 cents. Let me see if I can get an update here. No, I can't get an update. So I'm going to go to the GLD, which is up a penny. Woohoo! At 108.43. I just don't see anything yet, but I do see enough activity in some stocks that says don't rule gold out just yet in terms of having a pretty decent bounce, but I don't have the signal yet. But I'm just saying the way it's holding says don't rule it out because it hasn't broken down. Technicals are still reasonably good in the daily. Weekly technicals are okay. Monthly technicals are terrible. The dollar is down 0.06 at 95.97. Most importantly, what we're looking at here is that downtrend line. It's so important. If the dollar is going to rally, it has to get above 97.30, and then it can sustain a stronger rally. At this point, it's really just going sideways after breaking out, and it's got a range of 96.70 to 95.50, key levels. Now we'll go to the TLT. Very important. TLT has just spiked to 0.06, 123.68 in leg deep. Now, I think it's worth taking a little time to talk about it, and I will do that as soon as we get back. Dow's only up 13, and AA was a quick question that I had. Yeah, I can talk about AA now because it's the second day after what they discussed. I'll be ready straight after this.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman. Dow's up 20, S&P's up 5. Oh, what a strange market this one is. Well, the patterns are the patterns. We know the patterns very well. But, I mean, strange in the sense that there should have been a really strong reflex rally that held this morning. Instead, there was an opening. The futures, I had a Chapman Wave trend gauge get flashed, as my subscribers know. We had a signal yesterday that said off the low, there should be some kind of a rally, 7 to 9 points in the 7 to 9, not 79, 7 to 9 points in the E-mini futures, the S&P E-mini futures, which should translate into a comparable move up in the cash indexes. It doesn't always do that. Today it more than did that. It was a fantastic move up, and that should have held, should have got a bit of a pull, but instead there was an opening move up, then a sharp decline. Now that sometimes initiates an even bigger move to the upside. I don't think it's the case in this particular instance, because what we're looking at here is that the volatility index is still holding very well. So we'll go to Ken in Derby. Is that Kansas? Ken?
Yes, it is.
Hi.
How you doing, Basil?
I'm doing well. How are you doing?
I'm doing just great, thank you.
Good.
I'd like to have you take a look at UVXY and see, get your thoughts on it.
Okay, now let me just ask you, are you in this currently, or you've...
Yes, I am. I bought some a week or so ago at
47 or something? Oh, way down. Okay. So here's what I'm looking at. So you see, it's a completely different story. If you come to me with it already bought, you're already making a fantastic gain. I'm going to make two recommendations, and I don't think you need to work. I don't think you need to actually do anything as I'm talking. It's not. I don't think there's that kind of a rush, but this is what I would be thinking. In the 120-minute chart, the UVX has gone from a low of 35 at 3:30 in the afternoon on the 17th to today's high earlier on. No, was that yesterday? Yeah, that must have been yesterday. Yesterday's high of 64.50. It's trading right now at 60.96. So 4 points of 60 is a big percentage move, and yet that's just the way this character it works, because it's the ProShares Ultra VIX short-term trading vehicle, trading at 60.83, down 68 cents. So I'm going to say one of the things that you might want to act on a little quicker, but the other maybe take some time, is that I would suggest to you, take something off right now. That's a fantastic gain. I don't have to tell you that on the upside. We've seen it on the downside with the UVXY, but it doesn't happen that often on the upside that you can get such a spectacular rally in such a short period. It was only once before, and that was from the August 24th, from the move into the August 24th high. And it went from 24 all the way to 91.25 on the first. So wait a minute, that's the other way around. On the 5th, that was the low. So what I'm going to do is say, maybe you want to think about taking a little bit off, and that's something you can plan to put back on. And that's just part of money management, because this is leg D with a chance that you could get a peak D. And you can see the 120-minute chart is just stalling a little bit. So there's a chance that it could pull back maybe to the 55 or 52 area. And if by the end of the day, there's the traction on the wheel spin starts to kick in on this market, and you start to see end of the month buying, then you can see the Dow go back to the highs, and maybe the 16, I'd say for subscribers at 16,030s was resistance, and then 16,070s, then 16,090s. I just want to see what the high of the day was. The high today has been 16,118, and then 16,120 was the next area of resistance that I had. So I'm thinking here that there's a better chance that there'll be some fading of the UVXY, and that you want to lock in as much as you can. So if it was me, I'd probably say, you know what, it's such a big gain and the market remains quite weak. I don't want to be out of this, but boy, that kind of gain, I would like to, for myself, I would like to take 2/3 of my position off. I'd keep 1/3 in case the market tanks and it goes even lower today instead of higher. And then you've got the remaining UVXY, and obviously you're not going to make as much money. But I think protecting your gains is actually way more important now. However, and this is the reason why I said this is like a two-part thing that I wanted to talk about. The weekly chart is holding above the 55 level, the 9-period exponential moving average. If there is a weak close going into Friday, this UVX could rally even further. I don't know if it will test the high of 91, but you want to be there if there's going to be a rally up. You know what? Can you hold on? Because the break will give me just enough opportunity to give you exact numbers that I'd like to give you.
Sure,
can you hold on?
Fine. I only bought 50 shares. So.
Okay. All right, folks, we're looking at the UVXY. It's the VIX index. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So we've got Ken on the line now. Ken, there are going to be splits. I don't know if the UVX is one of those, but I know that there are going to be some splits in a number of the ETFs. So that's something that you also might want to consider. Now, I thought it through in a way that I think you might appreciate. The support is at 55.40 in the 9-period exponential moving average. I'm going to recommend, because this period right now, 10:30 to 12:20, 12:15, really important. If the market isn't able to hold gains at this particular point, it's saying that the selling is still coming in. And it says that would be a little unusual for going into the last to the end of September. And therefore, I'm going to say to you, why don't you put in a stop on 2 parts of your position? One part is a stop under today's low. If that's okay with you, at 57, that's 4 points. Maybe that's too much. You could even make it 59.50. One part will be a stop there, and another stop will be a little bit lower down at about 55.20, which is below the 9 EMA. But what's most important is that you, on the position that I just discussed, the very first position, have a trailing stop. So that's 61.68. If for any reason there's suddenly another, let me just check the 120-minute chart. Yeah, there's a move up above 62. Just have a trading stop on that position and have it. I would even make it tighter on the if there's a market slide in FX the UVXY positively, I'd have a trading stop. I'd make it tighter and tighter, saying there's a good chance that I'm going to take out one of my positions, a small position, just so that I've covered. I've got the best gain. You know what I'm saying?
Sure. Well,
that you got.
This is only the second time that I've traded it, and I only bought 50 shares. So,
50 shares still can make you quite a bit of money if you're right.
Yeah,
so
right.
I'm just saying, my thinking here is not the number of shares. It is the mentality that, especially if it's only the second time and you've really got a great gain, I would try to say, hey, I'm now more in control of the market. I understand it. I'm able to play the downside. I'm able to play the upside, so that you want to get a really good positive experience from it. So either you say at 61.46, that's a great gain. I'm going to take out of the 50, I'm going to take 15 shares away or 20 shares away. And then you have a stop. But the thing is that if this market cannot have a rally today or tomorrow, the chart I'm looking at in the bigger time frame is not positive at all. I'm going to go to the SPX.X and I'll show you what I'm talking about. Look, that arch formation is so close to getting to the left side low bar that if there was a slide today underneath 1882, 1880, somewhere around there, you could quickly go down to that 1867, and you want to be there for at least part of your position. So I'm saying to you, if you can experience the pleasure of trading with a down move and making money and being more in control of your portfolio, the next time you'll be able to do it with much more confidence and maybe with a slightly bigger portion. But what happens is when you're able to trade, as we've tried to do very often, trade the inverted sentiment indicators like the TVIX or the UVXY, if you learn how to position yourself and then take profits, it becomes a way more comfortable experience. So I think that's part of what you're experimenting with, right?
Right. I'm just learning.
So I would definitely, in fact, because you've done this the second time and it's very successful, I'm going to insist that you consider taking something off. Even if the market turns around and it closes down 500 points and you don't make as much money as you would, I would like you to experience the profit that you can get very quickly from this. I'm going to say, tighten up a stop or at least take something off and then control the downside by putting in stops. You do not want to give much back at all. These things can dissipate. Profits can go very quickly. Let me explain what I'm talking about. The UVXY is trading at 60.91. The 58.87 is the 9-period exponential moving average. Doesn't sound like a big deal, but that's 2 points. That's already, about 2-3%. So I'm just saying to you, it'll be real nice if you can have that experience so that you can build up the confidence. And slowly, as you make money from this, there's going to be one day where it doesn't work. And you'll see that the speed that it can give is the speed that it can take away with. So that's really what I'm suggesting.
That's right. I thank you so very much, Basil, and you have a great week.
Thank you. Congratulations. Thank you for calling. I appreciate it. Good luck, Ken. Let's go to Tim in Rockport, Mass. One of my favorite resorts there. Coming to this is the first year. I can't believe it. I couldn't even tell you how many decades that I have not gone to Rockport. I don't know why. It just didn't work out. Hi, Tim.
Hi, Basil. How are you?
I'm well, thank you. Although now I'm a little disappointed. Summer's almost over. I never got to go to Rockport once.
Well, it's still nice here.
It is. It's a lovely place, and I love the bay. I love the way you can sit there in a little restaurant and overlook the bay. It's really, and that center. I keep wanting to book to go to a performance. The Louis Rockport Art Center music venue, and I haven't gone once. I've seen it. I've looked inside, but I haven't been to a performance. So, yes, you wanted to admit.
I want to mention to you my experience on that UVXY.
Yes, please.
I got involved with that a year or so ago, and
yes,
what I didn't know about it is that it isn't too safe to hold it for a long time because it has a habit of reverse splitting, and it can happen any time. And some morning you wake up and you have 100 shares, the next thing you know you got 10.
I know exactly what you're talking about because
and I looked up some of the records on it, and it seems to always reverse split, and it doesn't matter where the price is, and it doesn't matter. It just does it, and all of a sudden you're in deep doo-doo.
You know what? I know this very well. Our subscribers know very well. Very dangerous vehicles to trade if you aren't putting in stops and if you aren't. You cannot hold these long term because look at this. This is a stock, UVXY, ProShares, Ultra VIX short term, and they recommend very strongly that you treat it as just trading vehicles. It was once at, well, it's been, this is not exactly the price, but it was once at 6,497.98. That, of course, is not real, but that's the price if you take in all the splits. And look at it. Even though it's a short stock, I'm going to show you something. This is the ProShares Ultra VIX short term. So this is the positive side of the VIX index. And if you go to the other side of it, you will see it doesn't matter with these these 200, 300% trading vehicles. They're always shrinking. I remember a long time ago, I must be talking now 5 or 6 years, maybe more. I had in one of my Master Trader series someone who had traded at Goldman Sachs. He was one of their traders, and he had his own portfolio, and he had discussed he was either about to or had just left Goldman Sachs because they were very upset that two of them, him and his friend, in their portfolios that they're allowed to make up for Goldman Sachs as a trading vehicle, but not a public vehicle, they were short the bank stocks at the time. No, this must have been before the big bank crisis. And they were short those stocks. And he said to me, his friend, as soon as he left Goldman Sachs, bought there were not that many at that time, all the longs and shorts. He shorted all the longs and shorts of the 200 percenters and the 300 percenters. And they had all made him money, both the longs and the shorts, even the 300% longs, and the market was going up because of the way of the makeup. And that's what you really have to appreciate. They diminish in value at the end of the day because they get, most of the time, unless all the stocks in the portfolio move up strongly, and usually you want 2 days of very strong moves. So I absolutely agree, except there's a difference. The UVX is trading at 61. If you recall, the TVIX was trading at, I think it was in the 7s, and then it pulled back to the 1s, and then it went below 1, and that's when they split. I think the UVX at that time was, now I'm going back now. I think that the UVX had gone to about 5 or 6 or something, because it always trades much, much higher than the TVIX. So, yeah, you're absolutely, and thank you for bringing that up. And I did mention it to Ken, but I don't think this is the time that it's going to split. Only when it starts to diminish in value very strong, when these instruments get to the single digits or maybe the low double digits, then they become vulnerable to a split. So yeah, thanks for bringing it up. But no, I agree with you. And you cannot hold these things long term, even if you're 100% right on the trend, because of the makeup. They get readjusted at the close every day. And it's not to your benefit if you're long. It's usually the other way around.
Okay, thank you, Basil.
So you're not in it right now, but in fact, you're not touching it because you were burnt before. Okay.
Yeah, but don't now.
Okay. But don't be afraid of these things. You've just got to understand you want to get to the most opportune moment. For instance, we could have a spike in the Dow, and the next opportunity, this is leg D, probably a peak D in the UVXY. So I'm watching this closely because, in fact, if we recycle higher and the UVXY goes above 65, let me make it 65. No, make it a little higher. Make it 66.50 in the next 2 days. Then the market rally is probably not going to happen right now because, as I showed, that arch formation in almost all the indexes. I mean, look at the IWM, and that would be the TVX, right? So you've got, look at that. It broke the left side low. This is a very important moment because at 108.26, the IWM was the low of the 24th. Yesterday, it went down to 107.88, and it closed at 108.30. So it closed 4 cents above. That's good. Now today it's back down. You've got today and tomorrow. If the IWM cannot rally sharply, it makes this whole 108 area, 108 to 109, very strong resistance. So that's the reason why I said to Ken that at this point he might want to take a little bit off, or he can put a much tighter stop, but he would like to keep the core position because this is very important. If the market doesn't rally today and closes like in the Dow 15,950s and the S&P 18,000, under 18,000, say 1875 level, that's not going to be good at all for the coming few days. So I just wanted to say to you, yeah, so the instruments that you can use on the short side, you understand that you want to treat them as either very short-term trades, intraday trades, or if you're lucky enough to get like the low, like Ken got close to the low of the UVXY, the low is 35. I think he said he got in about 42.50 or something. Then you can go to leg D, and we're in leg D right now. That's when it works in your favor. So I thank you. I appreciate that you comment on the splits, but I also wanted to say the idea of having a vehicle that you can trade with the volatility, I think is really important. And you've just got to know exactly when, because if you don't get out as it's going against you, that, I don't have to tell you, that loss can actually accelerate very quickly. So that's really
right.
the issue.
Okay, thank you, Basil.
Thank you, and I hope that sometime in the next month or so I'll actually get up to Rockport and have my annual walk around, although I love the beach. It's just really pretty there.
Good.
So,
I'll see you here.
good. Well, thank you so much for calling. I appreciate that.
Thank
Goodbye.
you.
That's
Bye.
Tim in Rockport, Mass. A very quaint village. It's a fishing town. I'm not sure whether it's as much fishing as it used to be, but it was really a lovely thing. Rockport shoes. I don't know if they have any relationship to the Rockport shoes. Okay, quick look to see if there are any questions. Oh, yes, there's a question. The question was, let me just do this here. I was talking about the TLT. So this is leg D. The TLT is up 0.03 at 123.65. Now, the reason I looked at this really closely, and the reason why I wanted subscribers to take only one new long position today, and that was for a bounce in the BIB. Let me see if I can get this. Yeah, in the BIB, which is 200% long, the IBB. And we wanted to remain short, although I said that swing traders, because we've come within a point of the low, the major low of August the 24th, swing traders might want to take their profits from the short we had just off the all-time high. But we want to hold the position because it looks to me like this is a long-term decline, regardless of bounces. So the BIB went to a low this morning of 52.50. I wanted us to get in and to hold it for a bounce, and I just drew in the 10-minute chart much earlier. Some people actually got it. We got stopped out for a very tiny, I think it was, I believe it was an 80 cents. I think I said 80 cent, 70 cent a loss on a $53 stock. But look, it was a great, well, we got stopped out, but there were some people that stayed in. And look what happened. It bounced from that level to a high today of 58.67 in a left side, right side cup formation. I want to talk a little bit more about this and what I think is happening in both the biotechs, the healthcare, and then the insurance companies out.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. So there are three things I wanted to talk about now. Let's go to the first one. First one is I want you to go through this thing with bonds. Now, the bonds themselves are at 157 and 30 seconds, up 330 seconds. No big shakes here. This is leg C in the bonds. It's leg D in the Chapman wave. Remember, leg D is where you want to be. You want to start putting in your resources, your technical resources, to see whether there's a possibility of recycling higher, or is this going to be a turn down, sharp turn down? 122.23 in the TLT is a very important support. 123.65 is where we're at right now. But the stochastics at 77% and actually strengthening, and the MACD is strengthening. That says to me that this overall market weakness phase is going to get the big test. And that's one of the reasons why I thought I didn't want to go long anything today. I didn't want to go long the Dow or the S&P because I expected that there'd be a lot of bumpiness. But I did want to go along that one vehicle because I thought the rebound could be very sharp, and it has been, and that's in the IBB. So some subscribers, technically we were stopped out for a very small loss, but there are subscribers who actually got in, made great money, and some are still in. And I think that this is the only way to play the counter trend right now is to go to what was the most severely hit, because the cork in water says, I want to spring back. So with that in mind, I'm looking at the TLT and I'm saying, The VIX index is in leg VIX. I can't remember. I just did it 2 seconds ago. Leg C, with the potential for a peak D. The UVXY, which we looked at with Ken, is in leg D, possible D. I'm saying to myself, well, bonds would have to pull back. The VIX index would have to pull back and do it very sharply for them for the market to have a rally of substance that gives you another arch formation. And as yet, I don't think, I see the severity of the chart patterns that I'm looking at, the QQQs, it doesn't matter what, having broken the support, the recent support says lower highs and lower lows. You can get a rally, but lower lows and lower highs, especially the weekly charts. This is a pretty severe downtrend. So get that out. That's number one. So now I'll go back to the bonds, to the TLTY, because, you know, I've talked about this for I don't know how long, the Japanization of our bond yields. I think that the Fed is just stuck. They're afraid to do anything. And that says to me, this doji candle that so far today, it's going to be really important because in the 120-minute chart, oh, I lost it over here. Is it? There it is. In the 120, oh, I forgot to do that. 120-minute chart is peak A, B, C, peak D, E. This is peak E, but it's holding well. And that's saying 123 to 122 would be key support if there's a pullback. Well, that's no big deal after such a big move. But if you start to see the TLT break into the under 121, start to close under 121, that would suggest that this rally in the market will have some legs. I just don't see it right now. As much as I want to, I just don't see it. So the TLT is very important to monitor. The weekly chart says, hey, it's a lot of work to get back to the recent high of 128.92, but it doesn't have to. It just needs to get to the 200-period moving average, simple moving average of 124.80s, and all of a sudden you're looking at the weakness, the market. Equity, money from equities will be migrating back into the so-called safety of bonds. Okay, that's one. The second thing was the VIX I wanted to talk about. The third thing that I want you to talk about is just very briefly, before we go to Kevin Hinks for the fabulous option show coming up. What I'm looking at here is that this is just a pathetic bounce of 284.16 in the IBB, going to 285.53. 1 point, less than 1 point away from the most recent August low. But look at the pattern. You've broken key support in the weekly chart. This and the monthly chart looks like it's going to break that low. So any rallies in the IBB might be short-lived. They could be a bounce, but my thinking is that this is serious, and that's affecting the XLV, which is the healthcare. And I can just go to AET, which is Aetna, which is in the healthcare with insurance. No, AET. Hey, folks, have a great day. I'll be back with
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.